How's it going, fellas? Welcome back to another video. This is going to be a different type of video. This is going to be kind of more of like a educational based type of video. Um, the reason I'm doing this is just because I'm aware that some people might not understand like some of the terms that I mean, like when I produce my trade recap videos. So I just kind of want to make these videos just to make sure that we're all on the same page, type of deal. That way, whenever I can explain something that, you guys can understand it too. And I'm sure if you guys are watching this video, you want to be a trader of some sort. Um, I do want to put a disclaimer. I am not profitable, by any means. I have been only trading for about 6 months as of now. I'm not claiming to be a profitable trader. So you know what? Take advice from me as you will. um, but yeah, let's just kind of get into this. The way that I trade is smart money concepts. So what does that mean, right? So basically, the way that I'm looking to either enter a position or exit a position or sell a position, um, enter in a long position or enter in a short position is basically based off of not necessarily support and resistance, but where would price want to draw to, and where are these big institutions looking for price to be so that way they can fill their massive orders, right? So the very first initial thing we have to understand when it comes to smart money concepts is liquidity. Liquidity, liquidity, liquidity. I want you to nail it through your gosh dang brains that liquidity is the most important thing when it comes to smart money concepts. Liquidity, liquidity, liquidity. I want you to remember this and I want you to nail it in your brain. Okay? So, what is liquidity? Liquidity is basically where either buy positions, like buy stops, are placed, where short or where stop losses are placed. Um, so why is this important, right? Why would they want to target where stop losses or buy stops would be? Because if they want to fill their massive orders, then they have to have some type of money moving through the market, right? They need some type of money to be flowing, right? So whether that's stopping traders out of their positions and that makes money exit, or they send price in a direction and they have retail traders enter positions, putting money back into the market, or buy stops are at where that's entering money back into the market. So they need this money to be flowing through the market, right? So now that we kind of understand like what liquidity is, kind of, not necessarily like on like a deep level, but now that we kind of have like a basic familiarity with it, we can kind of explain how to spot liquidity sweeps and where liquidity would be lying, right? So we can find liquidity on literally every single time frame, from the monthly to the weekly to the daily time frame to the 4 hour time frame to the 1 hour time frame, etc., etc. We can find liquidity on every single time frame, right? So where do we find it? What is liquidity? So basically, this boom, there's liquidity lying right above these highs here. Let me get rid of this liquidity, right? Stop losses are probably placed here. Buy stops to make the market go further is probably placed there. There's liquidity right here. There's liquidity right here. There's liquidity down here. There's liquidity right here. There's liquidity. There was liquidity here, but that had already been taken out. So why would we want to target these places? Why are these particular price points so valuable, right? So say I wanted, or so important, not valuable, but like they're important, and they play a significant role when it comes to why price moves in a particular way, right? Um, so right, see, say we wanted to go higher, right? We needed to first take out these lows, right? Because we can't just keep going up and up and up, because then there's no money being filtered through the market, right? So we need to, let me get a brush, right? We need to come up, right? Oh, let me make this pink or some shit, something visible. So we need to come up, right? We need to come up, but at a certain point, we can't just go up anymore, right? So we need to target these lows down here, right? Take them out, get stop losses hit, make sure there's money flowing through the market. People are like, oh shit, we're going to keep going lower and lower. People enter short positions, right? So then when market comes back up, this takes them out of the market, because then their stop losses get hit. So say they put their stop loss up here, right? They put their stop loss up there, right? This comes up, takes them out of the market, makes them more money, and then they could just keep doing that cycle over and over and over again, right? So, oh my gosh. And like we can, how do we, okay, let me restart. How do we spot valid liquidity sweeps, right? So, it's pretty easy, right? You find a low. It could be any low. You can find any high, whatever it is. You find it, you identify where the low is, you identify where the high is. So, right here, I found a low, right? Did price push past, or did it not push past this low? It took out the low, it filled in a little bit of this imbalance, and then we continued higher, right? Here, we didn't necessarily sweep liquidity here. So this wouldn't be an invalid liquidity sweep, right? Because we didn't sweep liquidity like this daily high here. We didn't sweep that, right? We came right above it, but we care about the wicks. The wicks are where the liquidity lies, not just the bodies of the candle. When it comes to Forex, it's a little bit different. So I mean, you could play off of like reactions off of this area, and in that case, that would be valid. Um, but when it comes to just like sweeping liquidity itself, this wouldn't be a valid liquidity sweep. And then when we did come up, we just kept coming higher, right? And then what did we do when we kept coming higher? We can't keep going high forever. We need to take out these lows right here, take out the lows, continue higher, right? It's a lot easier to see liquidity sweeps, like sell side liquidity sweeps, especially in a bull trend, like in a bull market. But I mean, you could still see it like even in a bull market, like right here, right? We made this high here, price came up, pushed past this high, swept out liquidity, and then continued down, sweeping out these lows here, filling in a little bit of this imbalance here, and then continuing higher, right? We can go in the 4 hour. Let's just drag it way over here. Okay, right here. Identify a low, right there. Price comes down, pushes into here, fills in an imbalance, break structure to the upside, continues higher. Right. Price comes up. There's these highs right here. Price comes up, we consolidate. After we pass these highs, we consolidate, and then we capitulate back down to the downside. Price is coming up right here. Can't go up forever. We make these lows here. Price comes down, sweeps out liquidity, comes back up, seeks out these highs, sweeps out these highs, comes back down, then continues higher. So I hope you guys are just like kind of starting to understand what I'm saying here. And I know we just went over a few examples here, but really you could find it on every single time frame. We could go on to S&P, not even USD JPY, right? Let's get rid of all these strings. Identify lows. I mean, these lows, I mean, it just completely disrespected them. But price wanted to come down here. Price wanted to come down to these lows. Sweeps out these lows here. Doesn't necessarily hit these lows, but it takes out these. Price reacts off of it. Keeps going higher. There's these highs here. Oh my gosh. Price comes up, capitulates a little bit, sweeps out liquidity, continues higher. Then obviously we come back down. But even here, oh, we didn't sweep liquidity there. So it's not like liquidity sweeps is like well, it does happen on every single time frame. So I guess the reason I'm right here. Price comes down, pushes down, sweeps liquidity. Actually, before we do that, price makes this low, we push up, we sweep these highs here, come back down, capitulate a little bit further, comes back down, sweeps sell side liquidity, continues higher. Makes this low here, capitulates, just consolidates here, comes down, sweeps liquidity here. I mean, you could have gotten on a trade probably like just a very, very fast scalp. But I mean, you would have gotten stopped out. I mean, if you entered there and then had the targets at these highs, you know, probably would have gotten filled just because if you're accounting for spread. Price comes down, takes out these lows, comes back up, takes out the highs, capitulates down. Price comes down, or oh my gosh. Oh my gosh, can you please like place? Price makes these lows here, comes up, makes another set of lows here, comes higher, makes these highs here. Price comes back down, sweeps out these lows, then capitulates higher, sweeps out these highs, comes back lower, takes out these lows, price comes back up, make these lows here, price comes back down, takes out these lows, continues higher, takes out these highs here, comes back down, takes out these lows, because I'm sure there's probably like 15-minute lows um, lying right under here. So I hope you guys are understanding and you are seeing what I'm seeing. Because once you come onto the chart, because I'm sure this looks intimidating, I'm sure it looks hard, I'm sure you're scared. But once you put the time in and once you put the work in, you're gonna understand it. And you're gonna realize that the technical analysis isn't hard about trading. That's not the hard thing. The hard thing is the mental side of it. So I hope you guys like are starting to understand liquidity sweeps a little bit further. If you guys enjoyed this video and you want to see some more, let me know. And y'all have a great rest of your evening. See ya.